please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Have opened up in the positive terrain early this morning. Remember, the Japanese market has come off the highs as the US Senate delays the vote of the tax bill. So that's why, in fact, we're seeing the Japanese market more or less flattish as we speak. We should try to get out the intraday chart as well. That one has come off the high point of the day. We got a couple of economic data as well that did come out of there. The inflation for October rose close to around 0.8%, and the November manufacturing PMI came in at 53.6. Remember, this is the highest level we have seen since March 2014. So just take a look at that. That's the intraday chart today. Opened up with a gain of around 0.4%. It's come off the high point of the day. So just keep that in mind. The Kospi, well, that's trading with a bit of a mild positive bias. Actually, it's up close to around 0.1%, but that as well has come off the high point of the day. The other two markets, the Taiwanese and the Straits, we did see more green over there. In fact, we did have the Taiwanese index, I think, that had opened up with a gain of close to around 0.3%. So let's get both the Straits and the Taiwanese index up for you. That's up close to around 0.4%. So good going. More green than red is what we're seeing from the Asian markets. But the SGX Nifty, yesterday it was rather weak end to the November series, and that in fact is indicating maybe we could see some red just to kickstart trade.
Well, let's see how the trade begins in the first day of this month. But OPEC and non-OPEC oil giant Russia have agreed to extend production cuts until the end of 2018. The new deal will last from January to December of 2018, and the cartel will review the deal at the next OPEC meeting in June. CNBC's Steve Sedgwick reports.
So what has been a very highly anticipated OPEC meeting has actually ended with bonhomie all round. There were smiles from OPEC ministers left, right and centre. The Russians and the Saudis saying there was no difference in views between them. They were aligned fully. There was no light between their views, because that is flying in the face of what many people thought would be contention between the two biggest oil producers in this grouping. What they finally agreed in this declaration is to actually carry on with the cuts which they carried through in 2017, which were due to end at the end of the first quarter 2018. They're now going to carry through those cuts in production throughout the whole of 2018.
There is 100% agreement that the market is on its way to full recovery. The fundamentals speak for themselves. Inventories have been drawn down more than 50% of the target in 2017. We are, however, entering a soft period of demand, December through first quarter, and therefore those inventory draws will slow down, and in fact we may see a slight build in the first quarter. And therefore, we will have to wait until well in 2018.
Many people thought the Russians were looking for an exit strategy, and maybe they are. Maybe that will be reviewed on the June 21st OPEC meeting in Vienna in 2018. But at the moment, it appears that the policy is watertight, i.e. all members fully backing this deal. We do see now Nigeria and Libya picking up a cap on production. Of course, they weren't subject to the current deal. They are currently producing around about 2.8 million barrels a day between them, and that will be their cap in 2018. There'll be strenuous monitoring as well. The Saudis and indeed the Russians as well will both be monitoring compliance via the JMMC mechanism, the Joint Ministerial Monitoring Committee. For now, oil markets are taking this as a bullish sign that they are still looking to cap production and keep prices somewhere in the region of the current level.
Well, Manisha Gupta joins in with what the extension of the output cut means for crude oil prices. Manisha.
Well, morning, and thank you for that. Well, we have seen actually no reaction coming for the crude oil prices, because to be very fair, markets were anticipating nothing less than an extension of the output cut for through 2018. Because while we have seen the global supply, the production cuts take off 2% of the global supply, and you have seen a reaction in prices where both the crude varieties have gained up by 40% since the month of June. The markets were anticipating that it would be by quarter 3 in calendar year 2018 that you would see a rebalance coming in. So until then, it is going to be quite a simple straight market there. What the crude prices also are looking at is the fact that with the OPEC and the 10 other major oil producers continuing to cut output, there is a high risk of strong comeback of the U.S. shale, and that is what is putting pressure onto the prices right now. So, you don't see too much of a run-up from here. Perhaps in the next few days, with the kind of demand numbers that we might see, it is a couple of dollars on the higher side that we would see crude prices at the max there. But one more thing that has come in positive from the OPEC meeting has been the fact that Nigeria and Libya now have been told to cap their output over 2017 levels. So they would not increase any more production in 2018. So when it comes to the OPEC members, Russia, the other nine non-OPEC members, it really seems to be a very strong deal, will be supportive for the crude oil prices. The only downward risk, as I said, would be the shale comeback, and that would continue to cap crude oil prices going forward.
Okay, Manisha, thank you so much for that. So not too much of a rally coming on the account of an expected outcome that came out of the OPEC meet. But what really rallied were the US stocks, because the Dow surged to close to above around 24,000 for the first time. The S&P 500 also ended at an all-time high levels, with the industrials and information technology among the best performing sectors. In fact, a rebound in the technology stocks also lifted the Nasdaq as well. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
Markets seeing big gains on better odds for tax reform out of Washington. The Dow adding 331 points, closing above 24,000 for the first time. The S&P adding 21, the Nasdaq higher by 49 points. Consumer spending slowing in October, but still rising 0.3%. While that reading did not include this month's Black Friday and Cyber Monday sales, a recent consumer confidence survey found that nearly 3 in 4 Americans went shopping over the holiday weekend, spending on average about $335 per person. CVS reportedly close to finishing the deal to buy health insurance giant Aetna. The Wall Street Journal reporting the two companies have been negotiating for weeks, but an agreement could soon cross the finish line. The final value of the deal will be around $66 billion. And an update on that computer glitch that left thousands of American Airlines flights scheduled without pilots over the holidays. American says only a few hundred of its late December flights are still impacted. It said that pilots were picking up the extra flights, and the airline had more on-call in December than during other months. No flights have been canceled thus far. That's the action from the U.S. markets. You have a good trading day in India. Back to you in Mumbai.
Well, as Wall Street awaits a Senate vote on tax reform, Republicans have pushed back voting on their tax bill hours before a planned final vote. Now, the setback came shortly after the non-partisan Joint Committee on Taxation estimated that the plan would fall short of the $1 trillion of paying for itself, even after economic growth is taken into account. Senate Majority Leader Mitch McConnell said that senators will rework the legislation and have its next roll call vote related to the tax bill at 11 a.m. Friday, U.S. time. Okay, then let's shift our attention to the European markets. They closed a tad bit mixed. In fact, the frontliners were lower as market sentiment failed to be lifted by the positive trade that we saw in the United States as well as in oil. So all the three frontliners, they ended in the red.
Okay, let's see what is happening in the world of currency then. The dollar eases after rising in early Asia trade as the US Senate suspended votes on the bill until Friday as a key compromise to help its passage collapse.
And from the precious metal space, gold dropped as upbeat sentiment on equities and positive US growth data dented the appeal of the safe haven asset. That's why we're seeing that gold prices more or less stable at around $1,275. On Dalal Street, the Nifty and the Sensex, they fell more than 1% to end the series on a somber note. The bank stocks, they underperformed, and the Nifty Bank closed down with a cut of close to around 2%. The mid-caps, well, they were relative outperformers, and they ended lower by around 0.7 of a percentage point in the red. But December's here, and Mangalam joins us early this morning. Good morning, Mangalam. Final month of 2017. Final series of 2017. Wowee, what's trade looking like?
Wowie indeed, you know. I mean, it seems surreal that, you know, the year is almost over. But yesterday it was really the Bears which ruled on the last day of the second last series of 2017. Nifty and Sensex, both of them fell about 1.5%. You spoke about the Nifty Bank, almost a 500-point cut there itself. You take a look at the Nifty and the Sensex all through the November series. The majority of the cut came in the last week itself, telling you the momentum really was with the Bears. The Nifty Bank and the Nifty Midcaps, though, they outperformed in the November series. And if you were in the right stock, you would have made a lot of money irrespective of the frontline indices. Tea and coffee, for instance, the market said, yes, let's go ahead before the December alcohol begins. 37% on Tata Global and 46% on McLeod Russell. Titan Jet Airways, too, saw a good gain of almost about 30%. A third of its market cap increase in November. But yesterday, last evening, we got that mighty Dow move coming in, 332 points, across the 24,000 mark on hopes of the tax reform bill passing. But the market shut, and lo and behold, the voting has been postponed. So the big green tick that we saw overnight on Wall Street, that hasn't translated into the Asian markets. The Nikkei, Shanghai, as well as the Kospi, all of them trading muted with a muted cut. At the same time, the SGX Nifty not indicating a very good start, slightly on the red side. But we have another trigger too, the GDP, the second quarter GDP. Now, a positive surprise, not sure how much it would have aided sentiment, but the good part is there has been a no negative surprise, and that will keep some fear away. 6.3% versus our poll of around 6.4%. The important part, growth seen after 5 quarters. Yesterday, we saw a lot of writing in index calls in the December series itself. First day of the series, 10,300, 10,400, 10,500 calls. So any up move may see a bit of hurdle. We're back in that limbo, 20-day moving average to 50-day moving average. We'll watch out for that. Usually, remember, December is a light series. But this time, there's a party planned every week. We have the RBI policy. US FOMC said that we'll meet on December 13th as well. And then the all-important Gujarat results. A technical point as far as December series is concerned, remember, the FIIs, they've been selling. If they're absent and the domestic institutional investors continue to pump in some liquidity, may see some price action there.
Okay, Mangalam, so a lot of important cues lined up for the day and the month, including your birthday.
My birthday.
But in terms of the stocks and news, what should we watch out for?
A lot of stocks to watch out for, Anisha. We start with all the auto sales numbers. It's the first of that month, so it's the first of the month, so we'll definitely watch out for that. Maruti, Eicher, Bajaj. Low demonetization will support the base. That's the base case scenario. HDFC Limited, the big boy, will be in focus to sell a part of its AMC business via an IPO. I was looking at the last known assets under management, 2.8 lakh crores. So if you value it anywhere between 3.5% to 5% of AUM, it could be anywhere between 8,350 to 14,000 crores in terms of value. Watch out for Biocon 2. You have the trastuzumab target action date on December 3rd, which is a Sunday. So some action on that expected. M&M Finance, Nimesh tells us the QIP book has been launched. Issue size of 1,000 crores, anywhere between 435 to 446 rupees is the piece. SAIL, that stock has been moving. Phillip Capital now finally raises their target from 44 rupees all the way up to 120. That is something we'll have to watch out for. I'll await Nigel's opinion on that. UFO movies, poor set of numbers. The revenues were down, the net profit was down, as was the EBITDA. DLF, we have the board meeting today to consider fundraising via raising preferential equity to promoters or perhaps the QIP as well. Laurus Labs, they've received a US FDA approval for an HIV drug. Trivia, December 1st is World HIV Day. So these are all the stocks we'll have to watch out for.
All right, Mangalam, it's the final December. I believe that you're going to be a bachelor as well. December 2017, the final December. That's what Anisha meant, I think, when she was referring to
I don't think so. I mean,
well, he gave us a birthday treat last month, and I'm just waiting for another one this month. We can celebrate it as long as he's a bachelor.
There can be a lot more treats. It could be Christmas, it could be New Year's, but not too sure about the trigger that Nigel mentioned. No. That is something that
Mangalam, we have it on Power Breakfast itself. FY18.
I am not too sure on that.
You did commit on the national television.
The management shall not commit to that.
Okay. All right. Thanks so much, Mangalam, for joining in, giving us all the market cues as well as all the stocks.
On to the most important cue for the day. After declining for 5 straight quarters, growth is finally moving upwards. Indian economy grew by around 6.3% during the second quarter, staging a rebound from the 5.7% growth clocked during the first quarter, and also coming in line with the CNBC TV18 poll estimate. Sectorally speaking, manufacturing and electricity emerged as the top performers during the second quarter. However, services growth at 7.1% was below estimates. The agriculture sector also witnessed a drop in the pace of growth. Reacting to the GDP data, Finance Minister Arun Jaitley said that this quarter marks a reversal of the downward trend in GDP growth. He also expressed confidence that the economy will now be on an upward trajectory.
It's extremely important that India does maintain 7, 8 and maybe 8+ figure over the next 2 decades or so. And if we are to maintain that kind of a growth rate, it's only then that you evolve into a middle income earning country. You evolve into a country with a better infrastructure, and you become a better place to live in.
So all the people who are here and who would be listening to you, this would be work in progress? The GDP numbers?
I think so. I think it's a reversal of a trend after structural changes. Structural changes can hold you back.
Right.
And I think once the trend reverses itself, it reverses for the better.
Well, that's our Finance Minister sounding optimistic in terms of growth for the future. But Lata Venkatesh is with us early this morning to take us through the fine print of the GDP numbers. Lata, what led to that uptick in growth?
That's the best question you've asked, actually. You know, 6.3 is in line with our expectations. But why should we be happy? We should be happy because it is the answer to the question, what led to the growth? You know, if you take the GDP number and subtract from it agriculture and what government does, and you take the balance, that is private sector, services plus manufacturing. Right. That has grown by almost 7%. Okay. What has dragged us down is less government spending, which we know. You know, government spending was front-loaded and didn't, you know, that category which we call public administration, defense and other services, that actually grew by only 6%, whereas last quarter it had grown by 9.5%. So distinctly slowed. Agriculture again grew only by 1.7%. Even last quarter it was 2.7%. The last year, second quarter, was 4.1%. So if you take out these two slowdown and only look at private corporate sector, which would be, you know, manufacturing, electricity, trade, financial services, the entire lot, then it's a very good number, almost 7%. Now, that is what is called troughing out. Clearly, the momentum is back. Now, for a little bit of bad news, it's agriculture and construction. Construction also is up only 2.6. Maybe you will say better than 2%, which was the first quarter number. But 2.6, still the first half number is just 2.3. Now, why agriculture, again, the average for the first half is just 2%. So those are the employment generating sectors in our country. The rest of them don't generate that many jobs. So that's the sore point, but momentum is back.
The introduction of GST, there is a measure of uncertainty being faced by a number of businesses in computing their tax liability. This has meant that the tax payments due in a particular period were not being paid on time. This created a challenge for us, but we looked at the data and the numbers which came and decided to stay with our practice of measuring it on cash basis. But as a consequence, it is likely that when the revised estimates are prepared, indirect tax collections for this period may actually be higher than what we have reported. Suggests that there may be a possibility that when the final revised estimates are available, we may actually find that we have possibly underestimated the sales tax collection and therefore GVA on account of trade.
Okay, let's also listen into what the top government ministers Suresh Prabhu and Jayant Sinha had to say on the growth rebounding.
The 7% growth in manufacturing is pretty good. We are still lower capacity utilization. So the potential to grow in the short term is pretty good, because when you have a capacity already in existing, you can make the capacity utilization in the short term and can increase the production considerably. I told the manufacturing sector, I've been meeting sector by sector, the companies and the leadership of that, and telling them, why don't you use the excess capacity available to you, installed capacity available to you, by exporting more, so that in the short term, even while the domestic demand picks up, you can immediately improve the capacity utilization. So I think they must adopt these strategies, and I'm sure they do that, we'll see an upsurge in manufacturing as well. We are very committed to make sure that exporters' problems are addressed properly. We are making sure that exports will keep rising in future, despite the fact that there are certain issues. And therefore, export should be the driving force for India's economy in future. And therefore, strategies are being put in place which will take some time, but immediate issues are being addressed by way of consultation as well as by involving all other ministries into decision making.
We are in a situation where the economy has fundamentally shifted gears. I have been saying for a while that we were in third gear, and we had to shift gears to really put the economy on a much faster growth trajectory, and growth trajectory of over 8% a year, which we could sustain for decades, which is really what is required to make India into a middle income country. But to be able to make that adjustment from third gear to fourth gear, we had to go through a period when growth had to come down a little bit as we went through the adjustment process, and then go through that inflection and then go on to the fourth gear. That's effectively the process that we're going through right now. Prior to these structural reforms, maybe the economy would be able to grow at 7.5%, but then start to hit some bottlenecks. I think now with the structural reforms that we put in place, the economy can actually grow at 8% or more and sustain that growth over a long period of time. And that's really the important thing that's happening in the economy right now, and we are seeing that inflection point now. We've had Q1 at 5.7%, and now Q2 at 6.3%, and we see significant acceleration in Q3 and Q4, which is what I expect, and we are able to get to the 7% plus range for Q3 and Q4. We will still only see overall growth rate for this fiscal year between 6.5–7%, somewhere in that range, depending on how much acceleration we see in Q3 and Q4.
In fact, we caught up with a whole host of policymakers and economists, and here's their take on the GDP numbers as well as on the GDP growth outlook going forward.
ये जो ग्रोथ है ना, हमें अगले एक डेकेड पीरियड में देखना है कि हमें 9–10% पर ले जानी ज़रूरी है, और गवर्नमेंट ने स्ट्रक्चरल चेंजेस किए हैं, बहुत सारे स्ट्रक्चरल रिफॉर्म्स किए हैं, ईज़ ऑफ डूइंग बिजनेस में किए हैं, बैंकिंग रिफॉर्म्स किए हैं, क्रेडिट फ्लो होगा, ये सब जो चीज़ें ठीक आएंगी, और हम हर सेक्टर में, कंस्ट्रक्शन में, माइनिंग में, इलेक्ट्रिसिटी में बड़ा मेजर पुश कर रहे हैं। प्रधानमंत्री जी खुद रिव्यू करते रहते हैं। प्राइवेट सेक्टर इन्वेस्टमेंट वापस आएगा बड़े जोरों से, क्योंकि पब्लिक सेक्टर इन्वेस्टमेंट अभी तो पब्लिक सेक्टर इन्वेस्टमेंट हो रहा है, और ये प्राइवेट सेक्टर इन्वेस्टमेंट वापस आएगा अगले 4–5 महीने के अंदर, और ये ज़ोरों से आगे देश को ले जाएगा। हमें अपने जो रिफॉर्म्स हैं उनको बड़े ज़ोरों से आगे और ले जाना ज़रूरी है, और कंट्री हाई ट्रेजेक्टरी ग्रोथ रेट पर जाएगा।
There are definite signs of a turnaround. The idea that the economy is going into a continuous decline has to be junked now. So, and I read a lot of positives in the data which are not immediately obvious. For example, construction growth is low, but there are indications that this low-income housing, there's a lot of interest in it among entrepreneurs. We're beginning to see signs of investment in that. So next quarters, that could also turn up. The numbers are quite good, suggest that the impact of GST and demonetization before that on the informal sector has waned, has revived. Because, big worry was there was a loss of unemployment, but was it going to be persistent? Or was it a temporary layoff and people would come back? So these numbers suggest people are back and those jobs are back. And if you see greater formalization, that would be good from the point of view of raising credit in the future.
What we need to focus on is not so much on just on the headline, but also on non-agriculture, non-government or public administration, GVA. And that number has actually picked up very smartly. It was 3.8, went to 5.5 last quarter, and it's up to, I think it's about 6.8. My arithmetic is right. And I think that suggests a pretty strong, the private sector economy, private sector non-agricultural economy, that has rebounded quite smartly from 3.5 to 6.8 in 3 quarters, and that's a very good sign.
Construction is critically important at this point, where employment has become a major issue, both economic and political. After agriculture, construction is the single largest employer, and any problems there are going to get reflected in future trajectories.
Okay, on to the other macroeconomic data then. The government has reported a fiscal deficit of 26,400 crore rupees for October and 5.25 lakh crores between April to October period. Now, this means that it has already exhausted over 96% of its fiscal deficit target by October.